Hey, hi. Just wanted to kind of bring you to this discussion about inflation and which is one of the fear factor that's actually going on right now in the market. Um, Saying that the spiraling inflation that cannot be controlled um, can cause a recession and also result in the Fed increasing the interest rates to tame down the price hike, because one of the goal of the Fed is actually to ensure there are price stability in the market. Of course, there are all those core data like food, grain, as well as our flour and oil and gas that is quite difficult for the Fed to kind of like have a hand in it, because they are resulted by the very temporary crisis that's happening because of the Ukraine-Russian war, and Russian and Ukraine are one of the biggest exporter of all those two big items, grain, wheat, and natural gas. Usually, Fed would not intervene if they were to see that something is um, transitory, which usually a war, unless it's like a really a prolonged one. For this one, I think maybe that Russia may just occupy Donbass, the eastern area of Ukraine, and then just announce a victory early May, and then probably things would hopefully move on from there. And let's have fingers crossed there's no nuclear bombs coming to Kiev or Lviv, which is the western part of Ukraine, or other parts of Europe, or i.e. Finland and all that, whereby they are making decisions to join NATO as well, those Baltic Sea area, where they have a wide border sharing with um, Russia. So I just wanted to share with you the housing market, which is and the car market that has actually uh, cooled down in terms of the demand, which is a very good sign, because house and cars are the two biggest big tickets item for any consumer. I mean, it's not those Uniqlo clothes that you buy or the food that you consume. And in US, the food consume around 9 to 10% of the American average salary. Unlike, of course, India, a food could be 40% of the monthly salary of someone. So, so house and housing installments, as well as cars are the big ticket items. So with this rising mortgage rates right now at 5% in US, and there is a tendency to go up as well. It will here it says remain strong, but I think definitely has cooled down, and so that there's no lesser need for people to actually buy houses. And I think that the rising mortgage rates will not will not cause a crash in the market as well, because the right balance is always very important. Because I think rental demands are always there in US, as manufacturings are all coming back to US as well, from commodities to tech and all that. After seeing those COVID scare, whereby you can't even get masks to be produced in US and all that. So bring back America is something that is coming in, and wages has increased in 2021. Of course, it has flattened as well in 2022. So basically, rising mortgage rates is a very good thing to um, slow things down, but at the same time, keep growth healthy. Yeah. So um, then the next thing I wanted to say is about the car. sorry, the car prices. Car prices since January it has dropped as well, um, because which is a good thing. Since January, as you can see, car prices was all the way up 2021 for the second half, and it's gone down, and it has continued to go down as well in February, March. And we hope that to see April as well to for car prices to go down, where it means that the demand has slowed. At the same time, keeping things healthy won't crash a car industry market whereby there's just a slowdown, but it's a healthy slowdown and a very organic growth where the Fed wants it, stability in price. So if that are all seen, the Fed has a likelihood of interfering to jam the market with crazy interest rates hikes are less likely to happen. So I just want to show you why that these two important indicators are very important, car and houses, and the way that things are actually coming down are very, very interesting, and I think they are very healthy, and it's looking good for US. And and I hope these two factors gives you a bit of confidence in investing. And thank you for watching the video, and please like my video and subscribe to my channel for some great educational non-financial advice information that I've done research on. Thank you very much.